Welcome, everyone. It's been a really busy week this week. We've had real kickoff in earnings season, and we've had some massive moves in some of these stocks. We're going to look at a few of them today and just see what's going on. Some of the major moves. We had Snapchat, Tesla, Intel, American Express, and we've had this Trump SPAC, which is taking the market by storm. Mega FOMO going on there. But let's jump right back straight into it, and let's look at Snapchat. So,
So
do you
the
see that
social
move on
media
Snapchat?
company, so Snapchat, they topped 1 billion in quarterly ad revenue for the first time ever this quarter. So the big question is Apple killing Snapchat?
Well, that's the big question. They claim they are. Well, let's take a look at their numbers. And so Snapchat, what did they do today? They reported during the week, they reported 17 cents on an adjusted basis, which was like a six. They beat by around 11 cents, and revenue came in slightly shy. And one of the major things they noted was that the Apple iOS tracking changes as a significant headwind to their earnings. And what really dropped the stock was their fourth quarter guidance. They see adjusted EBITDA of 135 to 175 million, which at the midpoint would be a year-on-year decline, which for a mega growth company, it's just did not please the market. And revenue is falling way shy of consensus. The midpoint of 1.19 billion, and the estimate was about 1.36 billion. It really tanked there. But the thing is, the one thing they did have in their side, as noted by a ARC analyst, is that despite their revenue and adjusted EBITDA shortfall in terms of their guidance, they actually had their daily active users rising 23% to now over 300 million. So this is what one of the major quotes from their transcript on their earnings call that they did note that their advertising business was disrupted by changes to iOS ad tracking that were broadly rolled out by Apple in June and July. And while they anticipated some degree of business disruption, the new Apple provided measurement solution did not scale as they had expected, making it more difficult for their advertising partners to measure and manage their ad campaigns for iOS. So this is what they attributed to, and this is what happened. Now, literally 25% of the market cap wiped off on the back of that earnings. Insane. It was above $25 prior, $75 prior, settled at around 55. That was a painful day for Snap traders. Well, not for the traders, but for the holders.
Yeah.
Pretty mad. What do you think?
Yeah, well, is Snapchat going bankrupt? Well, I don't think so because, if you look at it, social media now attracts more investment than linear TV, and consumers are like spending about a fifth of their media day using social platforms. The great thing is Snapchat are showing that they're still continuing to grow, but yeah, they do have these headwinds from the Apple privacy changes. What's interesting is, Apple making these changes are likely to earn about 5 billion from their advertising business this fiscal year, and they're forecasting around 20 billion a year in 3 years, and that's up from just a measly 300 million of advertising revenue in 2017, right?
It's nuts.
Yeah.
The thing is that Apple are clearly going to gain from this. Google's still the juggernaut. The question is, how is it going to? We got Facebook earnings, I believe, this week, or it could be the following week. I'm not 100% sure. We've got to see how it's affecting Twitter as well. But it'll be interesting to see if this is the trend. Facebook had a bad, they dropped 5% in sympathy with that Snapchat earnings. So clearly, they've actually have stated they will be affected by it. But it'll be interesting that the move has already happened with Facebook. Will it be more of a buy the room and then they'll report something? They still are the juggernaut. They still make the most money out of all the social media companies. So the question is, how well have they navigated these changes by iOS? It'll be interesting.
Yeah, it'll be interesting. With Snapchat, they still have really valuable first party data, right? And that's like, it's the gold, right? Because, the problem now is advertisers, can't track, well, I guess within cross app as easily now with the changes in iOS 14.5 and above, right? So the thing is that advertisers aren't, getting their cake and eating it too. But the thing is, they're going to have to come around to using some of these platforms like Snapchat, Facebook, even more now. I think. But their data sets aren't going to be as rich. That's what it is.
Yeah.
For those that don't know, like I'm a
Yeah, you got
founder
your
of
own
a
app,
public.
isn't it?
Yeah,
No,
yeah.
yeah.
I'm the founder of a popular public transport app, which has about 1.4 million monthly active users. I derive most of our revenue. Well, we derive most of our revenue from small in-app banners that advertising that we display. But since iOS 14.5, we've seen revenues drop. From all iOS users pretty much that have upgraded to iOS 14 and above. So the main reason for this is advertisers aren't able to create as rich user profiles by tracking cross-app data and kind of amalgamating it all into a really nice profile about you. So this is an issue, but I think. I mean,
It's all a
with Snapchat,
targeted
yeah,
ad spend, right?
yeah,
This is
that's
it. It's
that's
now
what
going to
it
be a
is. Yeah,
general ad. Like they can't,
yeah,
they can't see that you've gone and searched for your, whatever you're searching for, and then advertise that to you straight away.
yeah, yeah.
It's
That's the main thing, and I think
yeah.
really, uh, it just means that bigger companies will have to throw bigger budgets, to try, I guess, trying to cast a wider net to try to, capture
That was Facebook's
audiences. Yeah,
argument, wasn't it? That this
yeah,
is going to harm the small company more than the bigger
yeah.
company, because the small company is the ones that really benefited from this direct advertising
Hmm.
on Facebook and things like that. This localized advertising.
Yeah. But the thing is that I mean, with Facebook, especially, they have WhatsApp, they have Instagram, obviously Facebook as well, like the platform. They've got such rich user profiles already, so it just means it's not as rich as before. But they still pretty much know everything about you.
Yeah, and
If you're using this.
I think with Facebook, if you look at it, I'm intrigued to see their earnings. I actually think it probably won't be as bad, because the thing, I feel like iOS distribution is huge in America and a lot more, maybe a bit more not as much in Europe. And I think that Facebook has such a wide net that they probably have so many Android users as well, that whereas Snapchat, I feel like, is so heavily used in the US and maybe a few other things, but how much do people use it in a lot of these other countries around the world? And I don't know. It would be
Yeah, I
interesting
mean,
to
the
see.
thing is with Snapchat, what I like about them is they're the innovators, right? They create the stories, that story format that was
Yeah.
copied by Instagram and now YouTube. They're so addictive now. You see them on YouTube, and I'm
Yeah.
like, I just want to watch some proper content, but you just get sucked into
That's
this,
it.
and obviously it was copied by TikTok in that way, but obviously expanded upon. And yeah, in terms of their advertising platform, they obviously they have that bit more of a bespoke service, meaning advertisers can get onto any of those channels and really uh, drill down with those kind of video ads, which I think that's a real strong point for Snapchat. But I guess there are also risks with the new um, Truth Social from
Yeah,
Trump,
well,
the
yeah,
SPAC DWAC.
yeah. Well, that will be interesting. What happens with that? That one still an idea.
Hmm.
Don't see it. But yeah, we'll talk about that. But the main thing is what you're looking at, Snap now. The thing is, I'm looking
Was
at
it
it, it's 50.
overvalued before? Was it
Yeah, well, I mean,
overvalued? That's the main thing.
the
It's dropped
question was
25%, but
what isn't
mm,
overvalued? That's the way I see
okay,
it. Like
yeah,
it, what is it? And the thing is that Snapchat had a huge move in the last quarter, so they're pretty much now back to where they were before the prior quarter. So
yeah,
they've come back $55. The thing is, it had a mad move, and I can't remember exactly how much it went up. It's about 14-15% today. I mean, well, this week is a huge drop. And what do you do? Is this value now? And I think it will be interesting but if you actually look at the numbers, they've still got the numbers, they've still got the daily active user growth. You got to just see generally, the last earnings that I've seen, we've seen Pinterest last quarter, they bombed, and the stock went from, I think, mid 60s, high 70s, and it sort of was settling, and it just continually throughout the next few weeks to months went to an actual low of below 50. In fact, I was long Pinterest, and then I ended up, it just seemed to me like that was dead money, so I just got out of it and I just rotated into something else, and that's when obviously had that PayPal news, and I was like, oh, God, that's why I'm an average trader, I just like, God, what's the damn odds is the moment I get out of interest and PayPal come out saying, oh, I'm interested in Pinterest, but if Pinterest is anything to go by, I'll be a bit reluctant to get into Snapchat here, because generally after such a big move like that, I've seen that the stock just drags. It's just the worst type of movement. It's that slow drip lower, and then I can't see what the catalyst near term, unless someone comes out, that is going to all of a sudden get people going, well, well, I sold it everything on Friday, let me just now get back in at 55. I don't know, it'll be interesting.
No, people are just chasing deals at the moment, and they might think it's a great deal. Oh, it's dropped 25%, but like you said, just a couple of months ago, this is the level. This is the crazy thing about the market right now, Yeah.
Let's talk about Tesla now. So yeah, Tesla had a really good week. It reported earnings. A lot of it could be extrapolated out from their delivery numbers, but revenue was more or less in lines. One thing I noticed, we had a lot of different revenue estimates. Some say that Tesla missed, some was a beat. But either way, the main thing was that they reported strong EPS and strong gross margins, and very strong automotive gross margins, which I think was the key metric which really helped propel the stock during the week. And the initial reaction was actually one that saw it go lower, and then I think this was the earnings. It pre-market was like in the 860s, and then as soon as the market opened up, it just sort of rallied, and it just continued rallied during the week, and pretty much closed at about 910, which is a new all-time high. So, being a Tesla expert, what did you think of that?
I don't know about expert, but yeah, I mean, in terms of the drop, I mean, that's what pretty much all of us Tesla bulls were expecting. That it had already been priced in, and we were going to see a drop with all those front running, like I talked about in our previous video. But I guess the whole earnings call was so different this time because it was the first earnings call without Elon Musk. Zach, Drew, and Lars did a great job, actually. They're a little bit nervous at the beginning, but I think they really comforted Wall Street by answering the questions direct and kind of giving them what they wanted to hear. And they didn't go off on tangents like Elon normally does, talking about production and this and that and how hard it is. But the thing is, for me personally, I love those tangents, and I just to get any little bit of information that we can get from, that kind of adds to our thesis about Tesla. Usually he gives out a few little nuggets here and there, but Zach, Drew, and Lars, they kind of, just stayed on track, and I thought that was quite interesting and a new way to go. And I think the markets are like that. And I mean, but if you think about it, 28.8% auto gross margins excluding credits. I mean, that's just amazing. $3.147 billion in operating cash flow, 14.6% operating margin. Wow, you just have to say that they're like, this is numbers. Unheard of margins. They're mad. But the thing is,
what do you say though? People saying it actually is the most expensive stock in the S&P. It actually makes Nvidia look cheap. They're still trading at this value now. Like, where do you see it going from here? It's 910 right now, but there's obviously a lot of hype and a lot of people. It's a darling stock. There's a lot of cult, but I mean, it is incredibly expensive. But the thing is, it's just like Snapchat. They drop the ball one bit, can drop 25% in a day. Or do you think this ain't? What do you think?
The thing is that if I look at what stands in their way, it's not external to them in terms of like their destiny is in their own control. I think the main things that could drop the stock, I think I spoke about in the last one, are that FSD has some kind of crazy kind of crash or something bad happens on that. I guess also in terms of like Elon, if something happens to him, but otherwise, as long as they stay on their expected trajectory, I think that this, I think the numbers just you can't I think the Bears had a whole bunch of points about it and about Tesla every time they'd come up. There's Gordon the Genius Johnson, who would always come on CNBC and just talk about all of this I guess FUD, any little thing he could pick up, saying, oh, Norway's their market share has gone down, and whatever he used to say. Now he doesn't have much to say at all, and I think now his main arguments are just kind of laughed at by everyone. And I mean, the thing is, if you think about it, they spent 1.8 billion in capex. They don't have. They're pulling out these numbers when Giga Austin and Giga Berlin aren't even producing cars yet, and they said in the earnings call that you're not going to see any deliveries. I mean, they've started some production, small production, but and in the next couple of months they'll obviously start ramping up, but no deliveries from those factories until 2021, right? And if you just see like these type of numbers coming through, and they're not getting anything from Austin or Berlin, just imagine once they start doing, once those factories.
But I mean, that's probably why it's worth almost 900 billion. I think the main thing is the valuation. I think that's the main headwind only. I don't see much of a headwind in a lot of stuff, but if you look at the company,
you're basing it on the comparisons on auto, right?
No, there's no. This is compared to Nvidia. They're more expensive. They make Nvidia look cheap, which is trading at some crazy multiple with 70% gross margins. So this is now that you can't, the whole auto valuation with Tesla, that I don't even think that's in the equation anymore. It's like now it's like how expensive it is compared to tech, and even compared to tech, it's one of the most expensive tech names out there. So the question is, the whole it's now you don't even bring automakers into the question.
So my question is, for that, what does Nvidia have that they are, they've got a monopoly on, I guess? What do they have?
Well, I mean, they've got the hardware for the cryptographic chips. I guess
so
those
is AMD competing with them on that?
Yeah, I mean they've got it, but we've got a lot of competition coming up. I guess the self-driving definitely with Tesla, it's definitely they are miles ahead. But in terms of the actual autos, there's just competition. There's a lot.
There is competition, but pretty much all of the competition right now is either breaking even or losing money on all of these cars, right? And so the thing is that this game of EVs is all about economies of scale, right? And the biggest issue that they have is all of the legacy autos. Their product is the internal combustion engine, and that's being banned by pretty much most Western governments, right, around the world in just 10 years, right? 10 to 15 years maybe, right? This is insane. I mean, like, this is like being a cigarette company and they're saying they're going to ban your cigarettes, right? What's going to be happening? Like, all of them, where they derive their profit from is these ICE cars. Now they have to then phase that profitable business out and then bring in this non-profitable business. How are they going to survive? I don't know, because I mean, that's why everyone's trying to, I mean, all of those automakers are trying to drag their feet. If you think about Toyota, I mean, what is happening with them? I mean, I used to have so much respect for them, and now, like, they're trying to slow down EV adoption, right? I mean, it's just insane.
Yeah, it seems like there's two routes that they're going at. Some of these guys are going gung ho into the hydrogen route, but
that is, fuel cells are full cells.
That's a whole nother conversation right
We
there.
should talk about that later. But what
Yeah.
I'm saying is, if you think about, like, the market is obviously a general consensus of the way that the world looks at certain industries in the market for Tesla, right? It's just, there is a lot of hype behind it, no doubt. But the thing is, I think that hype is justified. If you just think about the 4680 cells that they're coming out with, like, they're taking their destiny in their own hands, meaning the biggest problem with Tesla at the moment in terms of production is trying to get their cells starved. They don't have enough batteries, right? And that's a problem for the whole industry. Now, I don't see a lot of other companies like really putting in the huge amount of capex required to make their own cells, right? To actually go and not partner up with anyone else. I mean, which they are doing. They're buying cells from everyone, CATL. I think they even signed something with BYD as well, and obviously Panasonic. But they're actually creating their own cells, right? And they'll buy up every reasonably priced cell that they can get. So this is the thing. And if you look at the most optimistic projections from Ford, VW, they're saying by by 2030, they can only be selling, like, this is their optimistic projections, and this is what because remember, with autos, you can't just say, okay, next year I'm going to go into big production. Obviously, there's like a 5-year lag time, from saying this is a design or this is what we want to do into actually this is what's going to be produced, right? There's loads of links in the supply chain, and so their most optimistic projections are like selling a tenth of what Tesla is doing in 2025. It's
so
just,
my question is this, and I've got this one last question before we move on to Intel. So they've risen prices again. So the Model Y, they're trying to push everyone to the higher variant. Another $5,000 increase in the Model Y, another $2,000 increase in the Model 3. How long can they keep on? They pretty much raised the price of the Model 3 now. I think over the last, this is the second price rise in a month, and so it's now becoming to a point where a lot of these EVs, they're all around 40, well, in the US anyway, 40 to 50, 55, and these guys are now they're pushing on $60,000 to just get the base model, and it's now it's going to get to a point where, like, how many people can keep? Elon Musk's whole goal was, I want mass adoption of the EV. I want to make affordable EVs, but all he's doing is making it more unaffordable. But I just keep on raising the price, and I know they've got the demand, the pent up demand, and they're milking it right now. But the thing is, how much can they keep on rising these prices?
So
when does it stop?
This is a great point. I think you have to look at it that it's like the fiduciary duty of the company is, because obviously it's not just to make money to return to shareholders. It's about trying to make to generate as much cash as they can to fund future operations, right? And now with the price rises, yes, you're right. It's not great in terms of.
And if you want to put FSD on top, add another 10,000. You're looking at $70,000 for a car.
Yeah,
It's getting,
of course, but the thing is, the demand is there. That's the problem. I mean, not problem. It's a great problem to have. I mean, like, if you have so much demand, right, and obviously your supply chain costs are going up, then I think they're raising their prices partly because of supply chain, but also partly because of this 8K Biden infrastructure, the EV tax bill that they're going to be coming out with. Hopefully, the thing is that demand is pretty much unlimited when that comes, right? And the thing is that, I mean, like, if there's so much demand for a car, right, a vehicle, it's just simple economics, right? The demand is high, the price has to go a little bit higher. And the thing is, I think that they've got those. This is the most amazing thing, is that they've got these levers that they can pull. If demand starts to drop, they can lower their prices, right? And obviously they've got really good margins, so they can back that up, right? So they're in this amazing flexible position where they can temper demand by raising up prices, and then obviously bring them bring the prices down when they see demand kind of waning. But I don't see that happening for a while still. And yes, I do believe that Elon has been talking about the $25,000 car, and that's
I
going to be
can't
the
see that
mass
happening
adopted ones.
anytime
But the thing
soon.
is, yeah, I mean, the thing is that there's not enough cells right now. There's huge demand. I think the actual demand for EVs is the demand adoption curve is much steeper than most people thought. I think I mean, I think you're even looking for an EV for your next car,
Yeah,
right?
no,
I think,
that's it.
and you're not unique. I think most people are. Everyone I know, I don't think they're going to buy. If they're two-car household, they're going to have at least one EV for their next purchase. Pretty much everyone I know is looking at EVs now, which I didn't think it was going to be as quick as it is going at the moment. So, and Tesla obviously primed to, they forecasted this, years back,
Yeah,
and
I
then
mean, see,
obviously they
do you
put
know the
everything
thing
into
is, this
place. Whilst
is,
everyone else, do you remember GM saying, "Oh, I think in
uh,
2018 they said by 2022 we're going to have 23,
yeah,
electric models." What do they have? I think they have two, or or three.
two with a
Yeah,
dodgy battery.
yeah, exactly. And then you see Ford, you see all of these guys, everyone with just one model, like pretty much one or two
No,
models,
I mean, what it
VW
is,
have three, and
if you are just in the Western world right now,
yeah,
like even Tesla, right? Okay, you've got your Model 3 and a Model Y for the so-called mass market. You've got your Mach-E, you've got your ID4. But to be honest, the real place, China, that's where it is. But let's leave that for another day. That we can go
yeah,
on about
there's a lot of
all
demand in
day
China,
long.
but you
But
see,
yeah,
VW there, like, they're not doing so well there with it. The
yeah,
people aren't
VW is,
attracted to their
yeah,
products,
Europe is
right? That's
there.
the problem. And the
Yeah,
thing is, I see, even if you buy, like, say you buy a Mach-E, right, or you buy a VW, right, you're buying the car as it is today. That you're buying like a great phone. You're buying a Nokia. Like, that's what I said, like, a Nokia or BlackBerry back in the day. But the thing is, people expect more from their vehicles, and they can see like Teslas are getting better. Even a 2017 or 2016 car is just getting better by software updates all the time. And then same with your iPhone. Even if you bought an iPhone 6, it's still getting better and getting all the new features, right? But and I think people are now trying to get that same experience with vehicles. And it's not like they haven't had enough time. They've had tons of time, but not like, there's no automakers really adding significant functionality changes to their vehicles via software updates. And I think that's another thing. But anyway, we'll go on to
well,
the, the
we'll
next
see.
topic.
We
I think
digress.
Yeah, I mean, the thing is, obviously, Tesla wants to make a car in every major category, and then they obviously publicly stated it in their earnings call. So I think that's amazing. And one thing I was happy about is that their net debt and finance lease payments of $1.5 billion were retired. I think the 2025 notes were retired. So it just looks like they're in a crazy good cash position.
Yeah,
So,
cash flow
and
is
yeah,
definitely
yeah,
good. We did see like the cash flow for the quarter was double what it was last quarter. But so
yeah. And then obviously, I think, like, I'm just going forward. FSD beta 10.3 is out literally just as we speak, and I'm really interested in seeing the iterations that are gonna lead to or, full self-driving, and obviously, like, I just, as a tech nerd, just seeing how that improves. I mean, like, just, it's on show for everyone to see, right? It's not like being worked on in some hidden lab like Waymo or Mobileye are doing, or anything like that. This is like for the world to see, and I think that that's actually amazing in terms of getting investors excited, right? And the thing is, Tesla aren't spending any money to advertise this. It's just all organic. People, their users are doing this. So I think, in a way, that it's kind of, I can see why the stock is that high, and I think it's justified. But anyway, let's go into the
let's see.
yeah,
Right. So next big mover we had during the week of note was Intel.
Intel.
Intel. What can I say about Intel? Well, that when 11, it dropped 11%. It's now trading below $50 for a long time. for the first time in a long time. I can't remember the last time. I need to go back on the charts and have a look at that. But they reported a strong Q3 EPS number, which was $1.71, which was like a strong beat of the $1.11 expected. But the revenue did fall slightly shy. And again, it was the guidance that rocked the stock, same as Snapchat, 90 cents there, forecasting for Q4, which was below consensus while revenue was roughly in line. And the biggest thing that really weighed on the stock is the continued gross margin contraction. They forecasted for Q4 53.5% gross margin, which is lower than this current quarter and lower year on year when I think it was around 57.5%. So it's about 300 to 400 basis point decline in their gross margin. And for the full year, they did raise their EPS outlook, which is largely due to the strong beat in Q3, but they're affirming their revenue, which was slightly below consensus. And their adjusted gross margin for the full year seen at around 57%, which was largely helped by the gross margin in the first few quarters. And another thing that the analysts really saw as a headwind is this massive boost in capex for next year. So they're looking to boost capex almost 30-40% from next year, from this year, to 25 to 28 billion, from 18 to 19 billion. And we had an analyst from Morgan Stanley, they go that they've consistently said that over 25 billion capital spending would be problematic for us, and that guidance, the current capex guidance and higher in the future years, put a burden on double-digit growth in 2023 and beyond, which the company also forecasts, which seems challenging, particularly given our cautious view on hardware demand after all. So that's some of the analysts' take on Intel's earnings, their higher capex forecast, lower gross margins, and this is what happened to the stock. Had a monster move lower, settled at 49.44. So what do we say about Intel? AMD did move up on the back of that, but quite the move there for Intel.
Do you think it's justified that people are saying it's undervalued at 230 odd billion?
Well, I've always found it weird. Like, and everyone looks at growth, right? So the thing is that Intel is going to do 76 billion in revenue, right? And their EBITDA is more than AMD and Nvidia put together. Like, Nvidia is worth double the amount of Intel with their growth rate in a view of trying to get to what Intel is earning now. So the thing is that obviously as you get bigger, your numbers get bigger, the natural growth is naturally plateaued. So is it that you get penalized as a stock when you start reaching the numbers that you're aspiring to, that initially you were aspiring to come to? So Nvidia, if I remember correctly, their quarterly revenue is about 6 or 7 billion or something along those lines. So the question is, and Intel is doing 18 billion. So they're doing 3 times the revenue of Nvidia, and so Nvidia has to grow 300% to get to the sort of quarterly revenue that Intel is doing now, yet it's worth double the amount as Intel. So that's the question.
Is, like, the growth is pretty much stalled. I mean, if you look at 5 years ago, quarterly revenue, revenue was
exactly
around 15 billion, right? Yeah, I know. So this is the thing.
But this is what I'm saying. So imagine if
the reason why is how you have to be excited about a company, at least, even if they are just an Apple, that's just going to be a juggernaut going ahead, or whatever company it is, a 3M, right? You could look at their product map and say, this is going to do well. But the problem is Intel is being outclassed by multiple competitors, and their product roadmap just doesn't look like it's, first of all, being achieved fast enough, and second of all, innovative enough, right? So, and this is like just the gradual death that these companies, go through. You look at an IBM or whoever, it's like, I don't know if it's bureaucracy or it just, maybe they're just too legacy, in terms of their, they should have aggressively invested into, ARM processors a while back, because that seems to be the future. And then it's just like, oh, well, they left it to, they left the door wide open for Apple and all these other guys to literally dictate the future of the PC industry, right? It seems like their x86 chips were like modest gains every generation. You get like a 5%, 10%. Like, where's the innovation? What, you can see like they're pretty much tapped out on that. Where, you need to move to a new technology then, and they just rested on
But
their
this is
laurels,
it.
and
Well,
this is what's going
this
to
is what's
happen, right?
happening now, because with this, all these big foundries being opened up, as your TSMC,
Yeah,
obviously with all these
TSMC. Yeah,
foundries now, you've got the Tensor chip out of Google with the new
yeah,
Pixel phones. This is what it is: design your own chip, get it all produced. And the question is that do you need your Intel? Do you need your Qualcomm? This is the thing. When all these guys can
yeah.
start making their own chips now, Samsung's obviously most of the time have their own chips in their phone. Google's put their own in. Apple's now got it into all their own hardware. They're just moving in with the new M1s, M1 Pros, M1 Pro X, or whichever one that was. But
Yeah.
yeah, no, I mean,
But I mean, but
yeah,
the biggest issue is that, if you could get a lower cost, higher performance, right? Much higher performance and much lower power consumption, right? It's just a no-brainer. Say if you're setting up a data center now, right? Where power consumption is by far one of the highest costs, right? Like, why would you
yeah,
why would you use Intel stuff? Like, it's and also on the desktop market, right? Just imagine if you could get so much more performance per watt, right? I mean, it's just I mean, sorry, especially on laptops, right? The battery life gains are just huge. I mean, like, obviously you have Windows laptops, and like, how long does the battery last, right? It's just,
no,
it's
no,
it's
but I
not, it's
got an
not great.
AMD chip in my one,
Oh
so
yeah, yeah.
I mean, battery
But
lasts a good amount of time. But the thing is, it's true. Um, I mean, the battery life, it does get juiced up
so
quite
if you're
quickly. Yeah.
if you were given a company to invest in, would you
Well,
invest
this
in
is what it all
Intel? Do
comes
you
down.
think
But
this?
this is
Yeah,
what it all comes down to, right? So the thing is that clearly, we all know this anyway. But valuations, the numbers ain't as much as just the feel of wanting to own the company, where they go in the excitement about the company, and then when they maybe reach these heights that people want them to aspire to, but then afterwards the excitement dies down, that's when their stock dies down. Like
yeah.
right
But
now, I
also,
feel
if
like a lot of these investors are much more emotional investors than
it's true, it's
pure
true. But
numbers.
also, if you look at Intel's debt, right, 31 billion compared to 7 billion or something like that in cash, right? What's Nvidia's? I don't have it off the top of my
Yeah,
head, but it's like, you have to take that into account as
yeah,
well.
of
Like,
course.
and they're buying back shares, and they're not
This
like
is the
they're in a,
old tactic, buying back shares. I feel like
yeah,
that's
exactly.
the
And the thing is, I mean,
yeah.
IBM have been doing that for how many years, just buying back shares, right? And the thing is, it's still going down in price. It's just like, they're not like the competition. It's just run by MBAs rather than like, real innovative leaders, right? That need to take over and turn the company around, in my opinion, anyway. But yeah, again, none of anything that we're talking about, none of it's financial advice. It's just for entertainment
Yeah, this
purposes
is just
only.
our own
So
thoughts,
yeah,
right?
yeah, yeah.
But
We're just
finally,
discussing that. Yeah.
I want to just get onto one more, just a brief discussion, a brief look at American Express. Um, we had most of the financials all reporting last week, but American Express was um, a standout. It ended the day up around 6% at a new all-time high. There was some concern going into it, what would be the state of corporate spending, obviously retail spending as well, because a lot of the American Express has a lot of corporate credit cards and stuff like that. But clearly the numbers showed just massive, just huge beats all over. They reported 227, which was like almost a 50-cent beat. Huge. The revenue, which also came in strong, they affirmed the high end of their guidance, but they saw strong growth in their global consumer service pre-tax. Their provisions, obviously, just like all the banks, was much lower than the prior year, and they also saw their global e-commerce rev see massive jump, about 25%. And and again, just look at the chart. I remember I was looking at 175, 176, and I was like, there seems to be a ceiling here, but luckily, I just thought, let me just see what happens after earnings, and wow, look at that, 188 closed at the high. Just a mad move in American Express, just shows the resiliency in general. The bank earnings were really strong. Um, you know, just it seems very strong right now. The banking sector is rife, but you got all these neobanks coming in trying to take a piece of the pie. But American Express seems to be definitely in a good way right now. Yeah, well, I mean, the thing is sort of one of the biggest things I'm looking forward to this following week is DWAC SPACs. Like, so I'm sure most of you have all heard of it. The Delta Whiskey Alpha Charlie Trump SPAC, Truth Social, merging with a SPAC name. We've seen the stock go from 10 to a high of 186. The warrants have over a 4,000% gain. And right now, you just want to go to where the liquidity is. And my day-to-day trading, a lot of the time, is trying to find a bit inefficiencies, juiced up premiums, stuff like that. And the thing is that that DWAC is going to have some wildly expensive options going on. So the thing is that I'm going to try to do the similar type of thing what I try to do with IronNet and most recently with GWH. And with this one, I'm just going to try to see if I can put on some calendar plays and sell some near-term puts, buy some longer-term puts, hopefully get it for a really small debit, and that's going to be the play, because I feel like right now it's a casino. I've seen so many people, they've done really well off of it, and I had the biggest FOMO just not just buying that. But like the thing is that people, just tell me this. You bought it, let's just say you got in at 10, you got in at 12 and a half. Tell me who in their right mind
wouldn't take a
will
double.
go. Yeah, no, it goes to 20, it goes to 25, goes to 30, maybe, and maybe just hold to 40. And you go, that first day when who would have thought at 40 it goes, yeah, you know what, I'm going to hold it because it's going to go to 186. I mean, I would say you're absolutely lying if you go, I'm going to hold it because I think it's going to 186. I can't imagine anyone that got your 4-bagger that still hold it to 186. But the thing is, like we discussed in our previous video on average traders, that the float is so low, 25 million shares. First day we had almost 500 million shares trading. I mean, the float is so low. Just people, this is why the stock is moving up $5-10 at a time. It's just crazy.
It'll be interesting to see the momentum, once more shares are added to the market, and to see if it can keep up like a high valuation, because that will mean that Trump can, use that to, strategically either acquire some socials or some media properties, like, either a TV station or, some kind of digital media in which, he can start to claim back their rhetoric in the mainstream media. And, I sometimes I feel like maybe, well, just recently I've been thinking like, did the mainstream social media kind of shoot themselves in the foot by not letting Trump back onto their platforms, because obviously they banned him for a while, but do they need to continue banning him? Is it what about freedom of speech? Like, just because someone's in opposition, does it mean that they can be silenced forever? And the thing is,
it's interesting you
this is the whole
mentioned freedom
thing.
of speech, though. It's interesting you mentioned freedom of
Mhm.
speech, because this new Truth Social, the whole thing was, it's freedom of speech. Let people have their views. But they had in the thing, if you make a mockery of Truth Social or Trump, you'll be banned off the platform. So I'm not basically. I don't want to get all political here, so I'm not going to say my feelings about the actual website and the whole point of it. But on a trading
There
point
isn't
of
one at the
view,
moment, right?
yeah, no, that's the
True.
thing. In this trading point of view, if you just look at it as pure emotion aside, they've got no business right now. They've taken in all this money. They hope to use the 300 million provided by the SPAC acquisition to go create this Truth Social media. And realistically, how are they going to do it? Some kind of acquisition of an existing base. I mean, that's I don't see how
This
they're
is
going
the thing, that they're in a position now they can do that. And it seems like Trump supporters, or anyone who agreed with some of or disagreed with the social media companies kind of banning Trump, preventing freedom of speech, they can finally vote by buying shares of DWAC,
But see, this
and
is
to express their displeasure,
yeah,
right? That
like I was
censorship has
saying, DWAC
kind
could
of
be
gone out
like
of
a
hand, right?
MAGA movement.
Yeah.
But the problem about this SPAC, like Trump loves, if you're talking about the actual goal of what, getting there, sending out his truths, that's what they're calling it, right? It's that he loves getting through to, the people like the left wing, all the people like trying to get his point. The thing is that if this website is going to be full of his supporters, then it actually doesn't really serve a purpose, because the thing is, his supporters already, regardless of what he says, are 100% behind him. So the whole point why he loved Twitter is because he could go talk to the other side, and unless the other side really joins up in droves to this thing, it'll be interesting. But
Yeah, but I don't
yeah,
think I really don't think that it's like they pitched it as a as a kind of a social media company that they're going to make, and I'm sure they're obviously going to bring out an app and website for that. But I think the acquiring of this is like a fundraiser for him
yeah,
to
exactly.
to acquire more than just that one site, that one platform. Sorry. So I think it's actually a little bit genius,
Yeah.
and
But
this
the
he
good
can
thing,
make
yeah,
a ton of money doing this.
yeah.
Who knows what the actual share ratios are, how much of this that Trump actually owns? But I think his influence is kind of undeniable on how well time will tell how well this the SPAC performs, and until it de-SPACs and see what the final values are going to kind of
I
be
think the
going
most
long term.
important thing, I think, which will be interesting, is that now it's public, everything will have to be disclosed. So
Yeah,
we're able to see real financials here. We'll see real where the money's going, what's going on,
yeah,
and I think it'll be good. So, he can't hide behind all of this. Is going to, as soon as you come public, scrutiny, SEC rules, everything. And the thing
yeah,
in
of course.
SPACs in general, these SPACs have been moving. There's going to be increased regulatory compliances needed with SPACs due to just some of the moves that we spoke about in our previous pod. So it'll be interesting. But
Yeah, but how
yeah.
much of the recent drop in Facebook, Twitter, and Snap can be attributed to this new SPAC?
Yeah,
I don't
well,
know, 'cause I feel like like I was just saying before, in terms of like, have they shot themselves in the foot by not
yeah,
letting him back on? Because literally, Trump was saying that if he was let back on, he wouldn't have never, he wouldn't have maybe started this whole thing, and now he's raised all this money, right?
yeah.
I
Well,
don't
I
know.
mean, to be honest, it's hard to quantify. Maybe you can say a
Yeah,
little bit. I wouldn't really say so. Like, let's face it. This SPAC obviously created a lot of hype, and just like with GameStop and AMC, when people just see something moving like crazy, it just attracts
yeah,
everyone. Like,
definitely.
you just I know so many people that just traded it, have no interest
Yeah,
in
of
anything he
course.
does, but just traded it. So it caused up, so it was a definitely,
But the thing is, now the media can finally, well, we'll be talking about him again. Do
no,
you know
this
what I
is it.
mean? And so this is the thing, like, it's maybe a little bit genius from, whoever conceived it, is that, it will be, I'm sure if a platform is launched and, people will be scouring that, and like, when announcements are made or whatever happens there, it was on Truth Social, we found out this and that. You know what I'm trying to say? It's like a kind of, it's going to be
Mm,
bringing that, like, it doesn't necessarily going to have, it's not going to have the user base quantity of any of the mainstream socials, but I think it's going to kind of have, if it does come out, I can foresee like an outsized you know compared to the user base, an outsized kind of influence on what is shown in the media, because of this. Well, or maybe everyone will ignore it, who knows? But the thing is, people are talking about it right now, and
yeah.
I guess that's a good thing for Trump,
For
right?
me, the
Yeah,
biggest thing is this: trading opportunities. That's all I
yeah,
want.
of
That's
course,
all I
yeah,
look for
yeah,
every day. And you know what? Hopefully, with the options now, the problem was is you could only buy the stock.
yeah,
There's such a small float that it's be crazy to try to short that thing. But with options now, you can put some strategic plays, and yes, I'll just see. Monday, Tuesday, just see if there's something good that comes out. Let's just see how well the option market makers priced all of this. Is there going to be opportunity, or is it going to be so well priced that there's not really much that you could really do? That there's the short interest ratio, the borrow rate is going to be through the roof because of this tiny float, 25 million shares. So the thing is that it's going to be hard to just outright buy puts. But let's see. It's going to be interesting. It'll be fun next week. We've got, a lot of earnings next week as well. We've got Microsoft, I believe Amazon, Apple, all coming out next week. Facebook as well. So there's going to be a lot coming up next week. A lot of earnings. It's one of the peak weeks for earnings. There's a lot of the major names. So it's going to be exciting to see, what the market throws up and see what happens.
Yeah, it's going to be very interesting, and looking forward to discussing that on the future pod.
Yeah, please like
Yeah,
and subscribe. And to help the pod. Hope you found some of the information helpful. And remember, it's for entertainment purposes only. And yep.
And yeah, if you have any ideas of what you want us to talk about in future episodes, just leave a comment down. The comments and likes really help the algorithm find us, and we just hope to reach more people and just get a bit more of a conversation going about these topics.
All right, I'll see you on the next one.
See ya.